101 trades of my new trading strategy. That is the data that I want to go over with you and show you how things have been playing out and just kind of keep you up to date on this, which has been a fun journey for me, and just to see how things work, because as a former engineer, I do love data, and with the platform that I'm using, TraderView, it's very fun. It's very easy to track data. Data is being revealed to me that I'd never quite considered before. So if you're somebody that likes data, and as a hint, if you're gonna be a successful trader, it's not like you have to be a mathematical geek or a statistician, but you better like data to an extent, because this is a numbers-driven game, and you gotta know your numbers. You gotta know where edges exist, where they don't exist, or else you're gonna have a very hard time ever finding consistency. And that's what I wanted to do here. That's what this journey has been about, is not necessarily a new strategy in the sense of I'm using different tools, I'm using a different approach, just new in the sense of the asset class that is being traded, more specifically SPX options. So sure, you can trade options, but I'm getting even more specialized in only trading SPX options. So I'm in the options umbrella. I'm just in a very, very isolated category of only SPX options, which is essentially based on the SPY, S&P 500, which means that there's opportunities essentially every day. Had a buddy refer me to those, say, hey, check these out. I'm finding a lot of success, and it's a buddy that I trust. There's more background information. In fact, I did an entire podcast episode on it if you're curious, but I'm not going to get into that here, because the point of this video is let's dig into the data and show you how things have been going, and offer up a little bit more of okay, can SPX options, doing what I've been doing, which is what I would call a sniper shot strategy, can you be consistent? Can risk be managed? In other words, or is this a strategy where you take a loss and one loss wipes away like an entire month or an entire year or something like that? Or does it appear that, okay, yeah, losses have been taken, and when these losses have been taken, it hasn't blown up your account or anything like that. So that's because there's no doubt about it. You can be highly consistent and have like a 98% win rate. But the question becomes, are those 2% situations where you do lose money, does that mean that like all your gains are now wiped away? Have you ever been there? I know I've been there before. We're like, oh, look. And then all of a sudden one trade, it's like, oh, okay, I guess I can't really manage risk within the strategy. So those are what I've been tracking. That's what I've been trying to figure out. And, just, be upfront and not take your time. If you're looking for like bloodshed results, you're not going to see that here. It's actually been very, very consistent. So let's go to my desktop and look at the TradingView data. So here we have TraderView, and let's just actually go to the calendar here. And you can see that overall, it's been a very, very good run. Started back here in May 30th, went through June, and then you can see July here. One note, this column right here, I was just on vacation that week, so there was no trades. I was on vacation kind of somewhat right around here, traveling. But overall, you can see 1 red day, 2, 3. So I don't know the number of days that I've traded, but only 3 red days and a whole lot of green days, which is always nice. Not necessarily required, but does show that there does seem to be the ability to be consistent. But as I already mentioned, just because you're consistent doesn't mean that when you are taking losses that things don't get blown out of the water. Now, the one stat that is what it is, and I suspected it would come with this strategy, is that my largest gain is actually consumed, not even really that close, which my largest loss. Same here, another stat that I expected to be the case given the high win rate, but you can see right here, average winning trade is $55, but the average losing trade is actually slightly a bit more. But the key and why these numbers aren't as bad as what they appear is because, and this is what, like I said, I expected. Oh, there we go. I should have noted that first. That again, like I said, 101 trades, but right here is the key. An 84.2% win rate versus basically a 16% losing rate. So if you have a high percentage win rate, then numbers like this are not the end of the world. Now, they could be the end of the world if this number was, like if this was, let's call it $3,000. Okay, at that point, that's a situation where, okay, all your gains have been wiped away. Or if this right here is, I don't know, let's call it $200, $250, something crazy like that. In that situation, okay, yeah, that's great. You're at an 80% or 84% win rate, but all those gains would be wiped away. And this is also what I always like to point out, because you always get it, and we always say, oh, you're a trader, you're a day trader. Oh, didn't you know that's gambling? wow, what you're doing is just gambling. You don't know what you've seen that, or you've come across somebody in your life that you can just tell they think you're a degenerate gambler because you say that you're a trader. But the data is suggesting, okay, maybe it is gambling. But if it is gambling, then this is a casino that I really like, because I don't know any Las Vegas casinos that allow you to pull off 84% wins. So, I mean, just something to consider from a statistical, and like I said, this is all data-driven standpoint. And what was the other one? Oh, they're right in front of me. So then the wins versus losses. I mean, like I said, and I'm only scratching the surface of how powerful TradingView is. But you can see, right here that overall things aren't too rough. Like I said, this is always the good, or not the good one. The rough one here is, largest gain was 237, largest loss was 342. But, I'm not going to go over every single one of these lines because I want to value your time. But I did want to just give you a little bit of a context there of just some of the powerful things you can do. But overall, wait, where did that go? Oh, come on now. Oh, there we go. So what I really like here, and what the goal of everything is, and there is one of those red days as explained. So yeah, it doesn't look great here compared to the blue ones, obviously bigger than most of the blue ones. But when you get enough of these blue ones in a row, then those ones will work itself out. But right here is, the name of the game. You want your equity curves to be looking like that. Nothing's going to go straight up. You're going to have little downwards moves. So there is that one loss right there. But I mean, in a couple of days, it had been wiped away. And then since there, it's still continued been growing. And I should note, just because, yes, since I've started, I've made $3,774. But the point here has not been to make money. I know that sounds weird. Wait, the point is not to make money? Correct. The point was to just figure out, can you even be consistent? So yes, of course, consistency does lead to making money, but let me rephrase. The point was, let's see how much money, let's just max out the amount of money that can be made. No, that's very silly. That's very unwise. Let's first figure out, and you should do this with any strategy you're doing. Let's first just see with small size, can you even be consistent? Can risk be managed? Because if you don't do those things, or let me take a step back, if you don't know those things and then you just go out and start doing huge size, I mean, you could, to be fair, you can make a whole lot of money, but when you don't know, that's just complete gambling at that point, because you have no data to support whether or not what you're doing is even possible to consistently make money. But my point here, and as I've always said over the years, first prove consistency, because the nice thing about consistency, driven by data, is that, well, you can scale up. So in other words, instead of doing one contract like I've been doing most times, all I got to do is go up to 2 contracts. Then all of a sudden those numbers start to double just like that. I've changed nothing else. I'm not looking at anything differently. I'm not planning anything differently. All I've done is one simple thing of adjusting my position size. And by doing that, things can scale up. Prove for a while that you can be consistent with 2 contracts. All right, let's go to 3, so on and so forth. So that is why no matter what you're doing, find consistency and make sure what you're doing, make sure the product that you're trading allows for consistency, allows for risk to be managed. Because I know there's always gonna be somebody, Clay, you're terrible. You only made that amount of money. And I know. So for those people, just go out there, go do your thing. Do your thing. I mean, been trading for a while. I've done enough dumb things. I've probably done more things that are dumb and that I've forgotten about than you've ever done. I mean, that's how dumb I am. That's how long I've been around in trading. So all I submit to you is, if somebody as dumb as me, that's done as many dumb things as I've done, is saying, you know what, maybe start small and go slow and slowly scale up. Maybe take that advice as something that should potentially be listened to. But I also realize that in some cases, you're just never going to convince people. They're just going to do their own thing. And it is what it is. But that's what's happened over the past 101 trades. 84.2% win rate, which is great. I've taken 16 losses, so I know that losses are part of it. But way more importantly is that those losses have not wiped things out. They haven't caused that equity curve to be going like this, and then none of that has happened, which is always encouraging because it shows that, of course, nothing is guaranteed. There is no 100% win rate. But when those losses come about, they're not wrecking the entire strategy by any means. So that is the update. I don't know if I'm gonna do any more of these. To just speak frankly, these videos I don't think are that popular. So if you do like these videos, if you would like for me to do more, then comment more. So just hit more and hit that like button, because I have no idea how popular these are other than kind of those sorts of dynamics where people are interacting. So if you're not willing to take enough time to just quick comment more, then in my mind, it's like, okay, I don't think this was that valuable to you. But definitely hit the like button if you enjoy these. And I don't have a problem doing them, but like I said, it's kind of more a function of just how popular these things are. But that's where things stand. I know some people have been asking. So yes, the new strategy of trading exclusively SPX options in a sniper shot type of way, so far so good. I like the potential and I like what I'm seeing. I had a sneaky suspicion that it would be this way because at the end of the day, a product is just a product. But you just always want to make sure, but I've been very pleased with it. So if you enjoy, let me know, do you trade SPX options? Have you started? Are you considering them? Let me know down in the comment section. But like I said, if you enjoy this format, enjoy kind of keeping up on the data here, and then type more, and we'll see if I continue to do this in the future. But like I said, I wanted to at least get up to that 100 trades, share that data with you, and I've now crossed that milestone. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.